All right, good Sunday afternoon, folks, and here we are kicking off another weekly episode of the Walk Around the Markets. And I always like to start out with just a random chart, and in this case, we are looking at Google in the weekly time frame. And so, what this chart says to me is that Google with last week's action, has now broken above the median line of this pink Andrews pitchfork and the upper median line of this blue fork, um, and is now headed higher. And in Andrews pitchfork trading, our next price target is the next median line. And so for both of these forks, we get, there's the next pink median line in the pink fork, blue fork, obviously there's the intersection. If we look from a time perspective, we're out at 28 December. So end of December, 2100, that's what the forks are saying. And then if Google, which, obviously this is one of the bellwether stocks at this point in the U.S. markets. If Google is targeting 2100, it's hard to imagine that the broad markets wouldn't drift higher, wouldn't drift higher along with Google if that was going to happen by Christmas. And I think I did the numbers. I think that's 18%, something like that. It's a pretty good move. And so let's move on. And so change this week, I decided that the daily time frame would provide more value to you, my followers, than the 4-hour charts. So, I use 4-hour charts during the week, but hopefully the daily will provide value for you past past the open of the markets on Sunday and Monday morning. So here we are in the SPX, and so last week, so this gap up this Monday, that the gap and then the candle with that long upper tail, that was Monday last week. The markets all reacted to news about a COVID vaccine and how it's going to be 94% effective, etc. And so anyway, big rally on Monday, and you can see that by the close of Monday, markets were already discounting that news. And so that break to new highs did not hold. And now we've had the markets waffling sideways underneath this horizontal resistance level. Of course, they've got support from both of these forks. We've got a downtrending modified shift fork in the red, and then the upward trending Andrews pitchfork there in blue. Excuse me. MACD's overbought, high energy, and stochastics. Dow's pretty much the same story. We got a big move on Monday, big gap in the Dow on news Monday, but same behavior where we got a spike up to a big high, but by the close, sellers had taken price back down lower, and now we've had a week just waffling sideways. Price both here in the Dow and in the SPX, price is very overbought from both the moving averages. So here's the 20 and the 50, price is way up here, and then we got the 200-day moving average, and obviously price is very overbought from the 200-day moving average. Energy's high, MACD's overbought, quite overbought. So I look at these when price does this sideways consolidation. I like to think of these as an energy coil or yeah, basically, price is gathering energy for its next move, and the next move is likely to be decisive. Whether it's up or down, we can't say, but whichever direction price breaks out of this range, it's likely to be a decisive move. So the Nasdaq. So the tech stocks are having a little bit more challenge moving higher, basically chopping sideways um, in this range. At this point, we've got resistance at the lower median line of this Andrews fork, and then just above that, we've got the upper median line of this mod shift, the red fork. So anyway, that's equities. Let's look at the U.S. dollar, and I backed out a little bit because I wanted to show here in the U.S. dollar, it's been, downtrend for quite some time now, back into June, and so we're going on 4, 5, 6 months of downtrending action. And you can see that the dollar has gotten well below the 200-day moving average, and so if nothing else, the principle of mean reversion suggests that the dollar wouldn't be surprising to see the dollar rally back towards the 200-day moving average. But so far, clearly the trend is downwards in the dollar. So gold, obviously the noticeable feature on this chart is the big whack Monday. That's almost $100. And of course, it depends on, are you following a chart of spot gold, physical gold, COMEX? Doesn't really matter. Big move Monday. What's positive is that even in that big decline, price held at the 1850 level, which served as support back in late September. And so at this point, we've got a bounce off of that 1850 level. Prices up here challenging the 20-day moving average. Energy is low. MACD's in bear mode on a sell signal, so that's gold. But all in all, me speaking as a gold bug, I see this as positive action. We got a big whack down, and price is responding well afterwards. Let's just occurred to me, let's take a look. Let's do a Fibonacci retracement on this big move. Where's the bottom? There we go. And so, yeah, and so let me expand that so we can make it clear. So this is a Fibonacci retracement of that big move Monday, the almost $100 move, and so a Fibonacci 38.2% retracement of that move would take us back to 1895, which coincidentally looks like the 20-day moving average. And so that'll really be our next indication in gold as to what's likely to happen, is when we see what price does with that that level in the open here in a little bit this afternoon. Silver basically waffling sideways, but with a distinctive upwards bias. And so on the positive front, the big whack Monday, all it managed to do was to bring price back to a support level for another test. And then we can see that price has continued finding support along this level throughout last week. And of course we got price interacting with the 20 and 50-day moving averages, finding resistance at those levels. The mining stocks, so last Friday, the mining stocks had made what was very pleasing to me, a distinctive breakout from this pink downtrending channel. But then with the big whack down in the price of gold Monday, the stocks, the breakout failed, and so now the mining stocks have pulled back to support, and so they found support at the median line of this mod shift pitchfork, and now we've got a rebound price testing resistance at the 20-day moving average. The positive take here is that this low, Wednesday's low, is well above the prior low. And so the definition of an uptrend is higher lows and higher highs. And so here's our first higher low. Now we need a higher high, and this uptrend can continue, prove itself. But anyway, that's the positive in this chart, is that we could have a higher low in place as the start of an uptrend. So Brent Crude, I dropped all the way down to the 1 hour chart there. Let's pop back to the daily and zoom out. So Brent Crude, if you look at the weekly, and let's do that now, we can see that here's 2020, and that for all of 2020, price has been in a trading range basically between 46 at the upper end and 36 at the lower end. And so what we got last week, let's drop back down to the daily. What we got last week was price popping up to, that's 45.30 at the high, and then rolling over. And so the question here in the daily time frame, it's still a question, has price peaked, or is it going to make another run at 46? And if we drop down to some lower time frames, excuse me, it starts to look like price is rolled over. That was a peak. Price is rolling over. MACD sell signal from an overbought. So MACD got overbought. We've got a sell signal. Stochastics energy has run out. Energy is low. So on this lower time frame, 4 hours, it looks more likely that that 45.30 on Wednesday was a peak, and that price in oil is headed lower at this point. Now we're looking at the yield on the 10-year Treasury note, and what stands out, what's of interest to me on this chart, is the general trend higher in interest rates. So interest rates trying to go higher, and in particular, this is the 20-day moving average and then the 50-day moving average. The fact that they're both crossing above the 200-day moving average, reset this chart, and that hasn't happened. Yeah, see, we're all the way back here into, that's late 18. So late 2018, when the 50 and 20-day moving average dropped below the 200-day moving average, and now here we are popping back above. And so I would suggest that that could be significant change in the markets. And so we're at 15 minutes. That's the last of the charts. I am going to bid you adieu. Enjoy the rest of your Sunday, and we'll have the markets opening up here shortly. See you, folks.